my great pleasure to introduce Joseph Muscari, who's the Executive Chairman at Mineral Technologies Incorporated. As you are aware, as you've all read his biography, and he assumed this position in March, having been the CEO and Chairman since March of 2007. Now, I'm not going to go through the entire history, but Joe started out as an industrial engineer, graduated cum laude from, yes, we have a lot of engineers. And he graduated from the New Jersey Technical Institute, or Institute of Technology, I should say, and got his MBA at the University of Pittsburgh. And right after he got his MBA, he took the job at Alcoa, and he started out in 1969 as an industrial engineer, and in the Northeast predominantly. In 1989, he started a series of management positions, and then in 1979, he started a series of management positions, and then in 1989, started moving up in the corporate hierarchy as group vice president, and a series, very rapid progression through different executive levels, again, as you saw on his bio. The thing that struck me when I looked at his biography is the breadth of experience in terms of managing product divisions, managing functional areas. I know his favorite was IT, based on some discussions I had with him. That's a joke. But he also managed a lot of other support areas. He was CFO, as you saw, before he left Alcoa. That was his last job with Alcoa. He also managed geographic areas. He had a very global perspective. He was an entrepreneur in terms of starting new positions or being put in new positions, being asked to create new divisions. He was instrumental in their entree into China. And so as he progressed through the corporation, he had this breadth of experience that he brought with him. And again, when he was CFO, I think it was that point in time he was actually asked by Mineral Technology, to be on their board. And then from the board came his current position. So again, it's a great pleasure of mine. He's got a breadth of experience, a depth of knowledge, and is willing to answer questions. I told him this would be a participative class, and he's also my personal friend, so I'm just totally excited to have him with us. I've been saving him for the right class. Thank you, Joe. Take it away.
Thanks, Marlene. I am, in the time we have, I'm happy to kind of go anywhere you would like to go. And thought I'd just say from the beginning, there isn't really any question that I'm going to be uncomfortable with. So I'm happy to go in any direction, any question, anything that you think could be of help to you or others. We've got two general paths. One option we could take is simply make this an open forum, make a Q&A. The other option would be I could share with you in sort of a case format when I came into Minerals Technologies in March of 2007, what I found in the company, and kind of give you a sense of what the company looked like, and then ask you what you would have done if you were here in 2007, and then show you what we actually did. And then as part of that, and I think we'll have time to do Q&A with that as well. But I'm really at your total disposal in terms of which way you'd like to go and what your preference is. So I need a sense of the class in terms of what you'd like to do.
I think case would be overwhelming.
Case study? Okay. So that's what we'll do. So we're going to flash back in time to 2007, and the company, Minerals Technologies, is, we call it a global resource company. We're basically a minerals company that develops industrial minerals, and we produce and we market these minerals literally all over the world. And I'll give you a sense of this geographic reach. The company, if you look at our public documents, we have two reportable segments. We actually run 3 separate business units, what we call our paper PCC business, and PC stands for precipitated calcium carbonate, and I'll tell you a little more about that later. We have a performance minerals business where we have 4 mines across the U.S., 1 in California, 1 in Montana, 1 in Massachusetts, and 1 in Connecticut. We also make refractories for the steel industry, and we make a metallurgical wire product that goes into thin slab casting for the steel industry. So that's sort of an overview of the company. This gives you a sense of the reach. We've got 86 facilities. 8 of those are research facilities and about 20 sales offices. We have today around 2,100 employees. I'm just going to go through this real quick with you just to level set you. Sales, we have roughly a little over 50% in the U.S., a little under 30 in Europe, Asia, 11 and growing, and then Canada and Latin America, 7%. By product line, half the company is really this paper PCC business, and the balance breaks down into refractory products and what we call GCC, which is ground calcium carbonate, and then some specialty PCC products. We also make talc products. This will give you an idea of what our facility looks like. This circled area would be what we call a satellite PCC plant, and what's in the background is a paper factory, a paper mill, if you will. And what we do is we build most of our facilities for PCC on the site of the paper maker. So we have a combination. Our business model here is a combination manufacturing and distribution model built into one, because we then directly supply very often through piping or through batch delivery right into the paper mill. This product is a crystal product, and we make many different shapes and particle sizes. And what it does, it helps give paper its brightness, its opacity characteristics, and it is early on it was a disruptive technology for the paper industry. This company, by the way, was a spin-off from Pfizer in 1992. And so the company's one of its core technologies was crystal engineering, where through the processes of precipitation, we can make a specific shape and size of any type crystal, which then goes into and replaces wood fiber in paper as well as other pigments. We also make products. Our product goes into things like Rolaids and Tums. This is just an overview of where our facilities are located. Just give you a quick snapshot of what it looks like in 2012. This is what a mining facility looks like. This is actually our California facility, Lucerne Valley. The products from those facilities go into things like floor tile, roofing, joint compounds, paints, coatings, and ceramics. Our refractories product line, what we actually make is a monolithic lining that is a protective lining to blast furnaces, basic oxygen furnaces, electric arc furnaces. And the business model for this business is one of an integrated product service. We have our own people in steel mills working side by side with the employees in a steel mill to coat the lining of furnaces when they're hot, when they develop soft spots, and we also make our own proprietary equipment for measuring the depth of the refractory linings. There's a fairly strong technical side to this business as well, and we have an equipment division that supplies the equipment for it to actually apply the material. So it's a sort of an integrated product service equipment model. And I wanted to go through these with you because it gives you an idea of the differences, significant differences between these 3 businesses. They're actually quite different. as I mentioned, and this is just by way of background, company was an IPO in 92. Share price was 16 a share. Market cap was about 375 million. Had no debt, no legacy liabilities. Pfizer retained some shares at that point in time. Within a short period, they sold those shares. The first CEO of the company had been a vice chairman of Pfizer. At that, during the period of the 90s, they built some 31 satellites. And the engine of growth was viewed as the PCC business as opposed to the other two. There was an expectation it would be successful internationally. The earnings from 92 to 2000, I think this is a key point to note, grew at a 15% per year compounded rate. And it threw off a lot of cash. In 2001, J.P. Velez, the first CEO, retired. There was a change in management. Somebody was promoted from within. The company had been trying to diversify into a new area, and diversified is probably the wrong word. They're trying to develop another minerals product that could give them another strong market position in an area different from the markets that they were in. That was a product actually for the glass industry called Sensil. They had lost focus, and there was a significant lack of discipline in the company, and I'll give you a little better sense of that in a minute. The 5-year performance, 2001, 2006, was they had very good sales growth, but earnings were flat. They had spent $500 million in capital, and for a billion-dollar company, billion-dollar capitalization, and also in terms of total capital, $500 million represented 50% of their capital base was spent in that period, and they got very little return from it. Their return on capital, because of that, fell from 11% to 6%, and it had been running below cost of capital by that time for a number of years. Cost of capital was 9.1%. This puts into perspective, this is what I looked at when I came in. The top line is production margin. The operating income is this line here, and then the red blocks are sales. So you can see sales were growing nicely. Operating income, however, was flat, and you notice something growing here, and that was their overheads. Expenses were growing faster than the top line rate of growth. Return on capital, you can see what had happened. They had by almost 2000, they'd reached about 11%, solid return driven by the high growth, and then they started to deteriorate as sales were actually growing, or the average capital base was growing. This is where you see the $500 million going into the company. I went and visited shareholders, customers, employees during my first couple of months there. I spent most of my time doing that. This is what shareholders told me, and were telling our investor relations people. They said, yeah, MTI, we did well with their stock for a while, but it's taken it's taken much too long to get to this point. Another company, Manning and Napier, voted to take their position out because they lost confidence in the new product that was being developed. The general themes from traditional holders, they wanted dramatic action that will create an increased shareholder value. They wanted capital expenditures cut. They were frustrated. And they wanted more insight into the company's long-range growth plans. They couldn't see where the company was going. And they wanted to be able to see that so they could, better sign on to what management was doing. Others told me they were expecting me to break the company up. Shareholders are dissatisfied with the company's strategy. You should conduct a listening campaign, et cetera, et cetera. Get a good general sense, that's what shareholders were telling us. Coming from Alcoa, Alcoa is a world-class safety company, so for me it was important to understand where this company was on safety, and was interesting. If you look at lost workday injury rate, which is this, are you able to see my pointer here? Anyway, I'm looking at, if you look at 2006, it's around 2.8, and what that represents is 2.8 injuries per 100 employees per year, or the norm for measurement is 2.8 injuries per 200,000 hours worked. Alcoa's injury rate in that period of time was about 0.2. So think about it, 0.2 versus a 2.7, 2.8. So the safety environment in this company was a lot worse than what I was accustomed to. In terms of, I did a deep dive diagnosis of the company, took a hard look at cultural norms of the company, and these were some of the things I found. There was lack of clear direction perceived by employees. Wasn't a clear understanding of where they fit in. It was a norm to be overly optimistic from the standpoint of developing operating plans, long-range plans. Risk-taking was not universal in terms of how it was approached or understood, and there were levels of risks accepted by the company that didn't make a lot of sense to most employees. And there was limited quantitative understanding of the external world, meaning competitors, customers, different parts of the world. There was a real need to benchmark from an external standpoint. There's also lack of long-term planning in all aspects of the businesses. They tended to be more math exercises as opposed to what I call strategic scenario planning of the future. A lot of resistance to change, limited examples of sustained continuous improvement. And it was interesting. I found that it's a billion-dollar company, relatively small. It's considered a small cap, but it acted like a much larger company. And I say that not in a positive way. A billion-dollar company needs to act like a billion-dollar company. And what I found was that people were acting more like a 30 billion, like they were in a $30 billion company from a culture and thinking standpoint. And was also fairly collegial, use of soft, non-quantitative terms and dialogue, presentations, proposals, and reports. The culture itself, the businesses were conditioned to operate in silos, so there was very little cross sharing of people or ideas between the business units. Senior managers were hesitant to communicate negative news. You did not report bad news up. If you reported bad news up, unfortunately the CEO in that period didn't like it, and you were normally banned from meetings or from reporting it, or you were able to tell that that's not something that you did inside the company. It also wasn't just with the CEO, it was fostered throughout the company. That lack of communication resulted in a lack of understanding at very senior management levels. The research part of the company, which had been, as I mentioned earlier, was a disruptive technology to the paper industry, and so a core competency was R&D. When I came in, there were only 6 ideas in the pipeline for new products. So for a number of reasons that the company had really discontinued focus and development of products. Yes, Marlene?
I had some requests from students to ask questions. Do you mind if the...
Absolutely not. No. Jump in now.
Stand on the end.
Yep.
I know, Steve Leonard, just had a question about your previous chart. You said the company was acting like a large company when they were only about $1 billion, and I just wanted to poke at that a little bit. Do you mean they weren't acting agile enough, or what were you going after there?
With many things. What you find in, let's say, a $30 billion company, you have many divisions, and different size businesses within those divisions and groups. And there was a disconnect between here, billion-dollar business. You've got 3 business units, and the people who worked in the businesses, up to and including the people who were running them, were operating more like divisions, of a much bigger company, and were not. Agile is a very good word to use. They were not very agile at all. They were parochial. They were not in constant contact with monitoring customer needs. All the things you associate with a very bureaucratic, large company was in place here. And, one of the things that, as I dug deeper, I found they had simply, when they became a public company, they maintained a lot of the cultural aspects of Pfizer, which, and, it was sort of like, Mother Pfizer or Father Pfizer is going to be the mothership. Corporate's the mothership, and as a division, even if we don't make money, well, that's okay, because we can always depend on the corporation to take care of us. So there was this dependency on the corporation, and it really sort of inhibited how these businesses were being run on a day-to-day basis. Did that help you?
That helped a lot, thank you.
Okay. Just a few other points. I'm just trying to give you a sense of some other things. Even our R&D at the time was done on a siloed basis. Manufacturing had lost focus. There were no standard manufacturing practices among the businesses, and I would, when I came in, really looked at the manufacturing we had here as average to below average. It was nowhere world class, and the manufacturing part of the company was treated pretty much as a stepchild. Customer focus had clearly been lost. As I talked to some customers, they told me how arrogant the company was. I talked about safety. Was not a priority inside the company, and capital expenditures, which I'm sure you gathered from my comment earlier, was out of control. There was no appreciation for capital as a scarce resource. The company generated a lot of cash, and so it tried to use all the cash that it was generating, and instead of problem solving effectively, when the company would have a problem, they'd throw cash at it. And so, cash was sort of a first-order solution approach instead of being a second, third, or fourth in terms of how you approach problems. Very little mentoring of employees. Succession planning was minimal. And as I showed you earlier, there was no credibility with Wall Street. The analysts that covered us, as well as a good part of the investor base, had seen too many promises broken, new products that didn't make it, and from a period of 2004 to 2006, there were 4 earnings warnings issued by the company. So, I know that's sort of a quick snapshot, and the time we had, I felt that it would at least give you a feel, but to maybe picture yourself coming into the company and you're the CEO, the questions I would pose to you would start with, where did we focus, what did we do, and how did we do it? So I thought, why don't we open up and start with the first question and ask, well, where do you think we actually started to focus? And I'm going to ask, is there someone who could be a scribe for us and maybe keep the list of things that we come up with?
Got it. So I'm told we can just raise our hands and Joe would see, so if somebody wants to start jumping in.
Just providing clear direction and vision of where where you wanted to take the organization.
That's good.
Probably, I would say, kind of redefine the culture in terms of the priorities, similar to the strategy, but just really looking at the culture of the employees.
sure part of that's going to also be breaking down the silos that were there. I don't know.
Did you hear the last comment, Joe?
I did not.
Sorry, breaking down the silos, you said each business unit.
Breaking down the silos, got it.
So what are your core products? I mean, it didn't sound like the company had a integrated understanding of what their core products and core directions were.
Okay, so redefining core products.
I think they've used the core competency of R&D for their setting the direction too. Vision.
What was that last one, Marlene?
Basically incorporating R&D into their vision or direction. What about doing a safety audit? We have safety audit and financial audit.
Okay.
Customer focus. Long-range planning, strategic long-range planning.
I'm sorry, didn't hear you, Suresh.
Strategic long-range planning.
Long-range planning.
So Jen, in terms of the financial audit, were you digging into where were all the expenses going? Was that the...
Expenses increasing, cash increasing, but growth is not increasing as much as expenses are. Let's make sure we have one person talk at a time and clearly, so make sure you hear this. Go ahead.
But this is a clear deep dive of getting to the root of what truly are the issues and problems that need to be addressed. If people are covering up or not communicating some of those things, just really drilling down to what it is that could be driving some of it.
The processes.
Yeah.
Quick wins are important to get the acceptance of the new vision of the company, so people start to align to the new vision.
Well, you have an underlying lack of trust that has to get well in order to be able to move in strategy.
Sometimes it might even be the organization really wasn't structured properly for their size. Anything else? Did we get everything? Jennifer, I was writing, and did we get what you had said?
Yeah, Steve was just clarifying why I was concerned about it.
Well, I was going to add on to maybe what to clarify, at least from my perspective. It sounded like a company that had gotten comfortable. You know, they made cash for so long, they were so profitable, and all of a sudden you start seeing all the overhead grow. And so I think what I took from Jim's comment is the company got comfortable, the overhead grew. Where was all the money going? And was all that money really adding to the benefit to the company? And it didn't appear.
And that was the financial audit piece.
Right.
And then from there, you have to have the back in place to make sure that
Right.
Yes.
you have a level of accountability that you're asking folks.
So financial controls would be next on the list.
Did we talk about that?
Yeah, performance management system,
Oh, like a balanced scorecard?
balance is one approach.
Is that a blended model on the balanced scorecard?
Okay, performance management system.
Do you want me to keep going?
And you think external forces, because it sounded like they also didn't benchmark themselves or kind of see what was happening around them in their various divisions or...
Was that benchmarking?
Yes.
Okay.
Well, competitive analysis is what
But it's also external reputation. Analysts and what's going on in Wall Street, how they're being viewed.
When we talk about benchmarking, one thing that, as I was looking at your financials versus some of the competitors, your gross margin is running about 21.81%, and it appears, looking at some of the other competitors who have much higher volume than you do, they tend to be running somewhere around 28 to 29% gross margin. So that's something that concerned me. I didn't have enough information to figure out why your gross margin is so much lower than some of the key competitors. So some benchmarking needs to be done on the cost of goods sold probably, as to why it's so high, so it'll help you improve your bottom line.
Knowledge management too is also something, succession planning.
Just a clarifying point, and that's a good observation, is that only half we get compared to the specialty chemicals industry, so if you're looking at margins, my guess is that's where you were looking, but only half the company is in specialty chemicals. The other half are in the refractories businesses, part of the steel industry supply chain, and the refractory base is what you would compare to, and for the performance minerals business, that also is a separate space with a separate set of competitors and industry profitability levels. So you really have three different companies that you need to compare to. And in fact, that's one of the challenges we have as a company with investors, to give them clarity on around these three different businesses and what they bring to the company.
I was looking at Sci-Tech Industries, Dow Corning, Chemtura, and those companies like that. And comparing.
Yeah, I'd say, those tend to be, and we're in the specialty chemicals space. So, for instance, that space will allow for higher profitability than, let's say, the refractories supplier base, the refractories base. But it is a good, at that point in time, if you, I don't know if you went back to that 05, 06 period, the spreads were even much greater, on average to the specialty chemicals arena.
Yeah, I was looking at your operational and last income, and you've done a lot of improvement. You've reduced labor by about 430 people in the last 5 years, and your operating income has gone up significantly, which is fantastic.
Yeah, and we're going to get into that in a minute, and so this might be a good time. I think that's a pretty good list of areas of focus. Why don't we move into what did we actually do? What do you think we actually did?
It looks like your focus was operating efficiencies.
All right, how did we do that? I'm sorry, I jumped to the next question. So stay with operating efficiencies. Okay, that's good. What else did we do?
Set a clear direction and vision.
Set direction, clear direction.
Maybe reset your values, your culture.
How do you, well, we'll come back to that as well. That's good. Reset values and culture.
Install the safety program.
Safety program.
Return on capital investment.
Cut costs.
Yeah, drove your overhead down.
Cut costs.
And feedback loops, probably, to try to create better processes with the employees.
Marlene, could you repeat that one for me, please?
Feedback loops to create better processes.
Okay.
Collaboration.
Yeah, from the employee that wouldn't talk about operational issues.
Top down, bottoms up.
Yeah, exactly.
Updated or realign the compensation or incentive structure.
What else?
Your customers know and make value statements. I don't know how that happens.
I know.
Well, and to,
CMOs are rubbing off.
and to dovetail on Lori's comment, I mean, if we're going to talk to the customer, it's It sounds like there also was a lack of trust from the investment community as well, so maybe you guys actually proactively went out and communicated with the investment community.
There's another fix the financials.
Cool. Hey,
Right.
Yeah.
We do look at those things.
The architect. Billion-dollar company, not a $30 billion company. The architect of the company itself.
A reality check?
Reality check? What, can you expand upon that?
Yes, they are a $1 billion company, not a $30 billion company.
Okay.
So broad organizations have this feeling of who they are based on.
Okay.
Was any sort of employee training or classes or something like that to get everybody aligned possibly? I mean, the whole knowledge management kind of thought.
Setting probably objectives for R&D at a big organization. Product line. So putting a protocol in process to be able to determine the value of it so that you're not just, that you've got a process for determining value rather than just wasting more money.
Is that Lori?
Yeah.
Could you repeat that, please?
So I think you want to make sure, because you've been spending money at a pretty big pace, and so how do you make sure that the ideas that you're generating, where you're investing that money, that there's a process built around that to kind of
To manage these first
Yeah,
weeks?
exactly.
Assessment, like, do you have the right talent in place to keep you on track with the vision that you're looking to achieve, and making sure you've got the right people in the right positions?
Just going back to the whole billion-dollar company, the 30 billion, how do you put that in that organizational structure, put that accountability in place in order to, so people manage the business as if it's a true business and not just in the same thing, but that my skin's in the game to make this thing be successful.
So is that an expansion on process to manage investment dollars? What,
That's fine.
I didn't capture it because I was changing pens here. And Mimi, could you repeat yours?
Yeah, I said a resources assessment.
Thank you.
Because do you have the right people in the right places to get this on track and get you where you want to go to fulfill that vision?
And by resources, do you mean human capital? Do you mean systems? What do you mean?
Oh, well, all of those, I mean, collectively. I mean, it's starting probably with people, and then do they have the tools and technology and processes to support it and teams?
One of the things was the manufacturing was the stepchild, and that we didn't do, so how do we reintegrate all of, because in order to be successful in our product line.
So specifically look at manufacturing. Okay.
Could be too, Marlene, what you said earlier about initiative versus experience, and maybe to re-energize the company, and it's going to take, different types of employees to start to create a culture that's one that's innovative and different than how they operate at Enterpriser.
Was that, just so I have captured it, did you say re-energize the company by realigning, or realigning what people do and how they do it?
Well, I think part of it, we had talked in the class before, in terms of innovation, whether you use internal people or you bring people in from the outside, and I think that's where you were going, Caroline, if I'm correct.
To touch on what Mimi said, is try to understand if the right people doing the right
Yeah,
job.
do you have the right people, or do you need to bring other people in?
And then do you need to kind of, to help with the culture change, bring in outsiders to re-energize versus, just having the same group of employees?
Okay.
How we doing?
Was there any sort of, maybe if his predecessor had more of sort of a, don't tell me about the problems and you're more open, were there any sort of like executive panels to kind of allow you to share your vision? Maybe that's like the feedback loop, but just to kind of set a tone to let folks know that if there were issues, then they could be reported up and that their feedback would be honored.
So sort of a process for internal communication that allowed for two-way flow? Does that capture it?
One thought I had related to strategic direction, part of it, it's not related to what we have here, is, you mentioned that the revenue, if I'm correct, 47% or 50% of the revenue is coming from paper industry, PCC, I think you mentioned. Looking next 5 years, 10 years down the road, is the overall demand for paper will be reduced, or is this going to continue? Is it going to increase? Since significant percentage of your revenue is coming from there, is this the iceberg that is coming that we should keep a close eye on? If the overall size of the market reduces, that the competitive nature, it'll become more and more competitive, the industry would be. So is that something, that external environment needs to be checked, or do you feel it's going to continue to increase, the paper demand for paper?
So you're asking about the viability of the PCC as a business for the long
That's
term?
right. Since it represents almost 50% of the business.
Is there some sort of connection to a lot of local paper?
Right, with the green technology, the least use of, less use of paper and things like that.
Or is it still significant reliance on it? So.
What do you think, Marlene? We got a pretty good list?
Yeah, I'm running out of board space, but I got the right color. We've got, well, yeah.
All right. Well, look, that feels like a good list from what I heard. Now, why don't we go to the last piece? There are, as you probably all know and have learned, there are 4 aspects of change that it's the where, the what, the how, and when. So we're working with the first 3, and when we get into what did we do and how we did it, the time dimensions of these will be self-evident. But the last one is okay. So we identified focus areas, we identified things we're going to do, then how did we actually do it? This is the tougher question.
How is the steward remember?
I don't know if they start out like a survey, internal, external survey.
How did we do it? I think you probably started with the communication process initially as to the strategic direction of where you're going as a company and what changes will be made and how the closed loop system will work so that you are getting input from all departments, all levels of the organization. That's one of the things that I would consider doing.
Restructuring.
Start with the communication process and then move to the next level.
Well, here's something to keep in mind. Certainly, a communication process was a part of the how we did it. But coming in, I'd never worked in this industry space before. I've been in aluminum for 37 years, and the mineral space, the chemical space was totally new. And actually, chemistry was my worst college subject. So I had to do some things. In order to communicate, I had to actually do some other things very early on. So what kinds of things do you think I had to do?
Learn the industry.
External analysis, internal analysis, competitive analysis.
Understand what the employees do on a daily basis by interacting with them, seeing what makes them tick, what doesn't work for them.
I think talk to the customers.
Correct.
But you also came in as a financial officer and you saw a company that was out of financial control.
Mm-hmm.
Probably financial control pretty quickly, I would think. I think you mentioned the first 2 months you did the assessment of the company to get an understanding of the company, the organization, right?
Yeah, I actually set a target. See, I had been on the board for a couple of years, so I did have some knowledge, but it was limited. As a director, as you probably know, depending on the CEO, the amount of information you get and effectiveness varies from company to company. But so I did have some information, but you're not in a company on a daily basis. I really didn't have much deep knowledge, but I had it from 5 board meetings a year over a 2-year period. So the statement that I didn't know anything is, I did know some things. And
Well, that was actually, if you're willing to talk about it, just a little bit of a history question. Did you already have some of these ideas, the improvements that you wanted to make before you came in terms of your transition between the board and CEO? Had you already discussed those ideas in the board meetings?
In a general way, not very much in a specific way. I had an idea of what some of the problems and issues were, from the board meeting exposure. When I came in, what I actually found was the breadth and depth of the problems were much, much deeper and wider than I ever imagined. The things I listed for you here, that I went through in describing the company, there were many more. I could have listed 3 pages worth that are tangential to some of those issues. So it was quite deep and it was quite wide. So I came in with sort of a general sense of some of the areas. It turned out I needed to do even more, and I had a time frame that I needed to act relatively quickly, and so I had to figure out what it is, how to get enough information in the shortest period of time to do things like reset the direction of the company, which was clearly one of the things that I did.
I would imagine that, walking the plant floors and talking to the folks and seeing the conditions that people are working in is going to give you, obviously experience in terms of the products and but also.
Yeah, I did that.
Provided in a report at a meeting, it's going to be significantly different than what you actually see, every single day, possibly.
Well, especially if they're trained to not fully disclose,
Report, yeah, correct.
so you kind of anticipate whatever you hear that you're going to have to question.
And you're able to pick up on subtle cues that maybe employees won't report on by just simply seeing what they do and make your own determination. That's an issue, that's an issue, that's an issue, but nobody told me about it because it's not on this nice piece of paper, so.
Right.
Let me maybe help guide you a little bit, or if you take a look at the list that we put together that you have in front of you, where did we focus, how did we do it, and if you say, okay, from that list, if most of those things are things that you have to do, then what you're really doing is you're into major company transformation, right? So the question is, so how did we transform the company? And a good part of that is cultural transformation. It is transforming because the culture gets into every aspect of what a company does. So what kind, in terms of the how, think in terms of transformation, think in terms of people, and what do you actually do to change culture?
You had to identify pretty quickly who your change leaders are going to be. So I presume in some of these early, quick, on-the-floor meetings and meetings with your leadership team, you have to find the like-minded people, the people that want to change, are willing to change, and are willing to be your advocates, out inside the company to make those changes.
Good observation.
I think create a sense of urgency, because, it's a transformation, so you have to create a sense of urgency.
Think Carter, yeah.
But also maybe put some quick incentives in place too, so that quick actions, in terms of prioritizing what you can do, but putting some quick incentives in place to help encourage that right behavior and empowering those leaders as well, like giving them the power to help drive that cultural change. It looks like a lot of layoffs were made, and I think that's a quick way to show that there's going to be a shift, and realignment, not necessarily, it's an effective way to show that there is going to be a change, not just going to be continue to grow and add on resources or money to problems. We're going to effectively solve them a different way. I think downsizing sometimes.
Also, getting the executive board on what the change is about, get the buy-in from the entire team.
And then give them the ownership and the accountability to deploy it effectively, so that.
With the buy-in from Suresh.
As an executive team.
Pardon? Executive team? What did you say after that? Okay.
What about the shareholders? We need a buy-in from,
Who do you mean by the shareholders?
well, he was talking, when he was out talking about, was it shareholders or?
You mean stockholders?
Yeah, that's what I
Shareholders?
mean, stockholders, because he was out and they were talking about all the things they were unsatisfied
Okay,
with.
so shareholders
with
is
the
fine,
company.
not stakeholders, that's what I was trying to ascertain. Okay.
Do you think I got much resistance from the executive team? Somebody mentioned, the executive team.
Yes,
Yeah.
Why do you think that?
Because they're part of the problem.
Then I need to change.
Everything's fine, why are you bugging us?
But it wasn't. I mean,
Human factors is the problem.
the data was clear, that they had access to the same information that I had when I came in. They had access to the shareholder feedback, some of it.
So maybe it was an issue of empowering them to make change?
Okay.
Engage in the process of defining what the change needed to be.
If you know issues and you're not doing anything about it,
And everybody's
Lori, I think you need to speak up.
if you're part of the problem, there's a lack of ownership. If I'm reading all the information and I understand it and I don't own it, then I need to not be part of it anymore. So here's the conversation, here's the new strategy, and how are you going to show me you're going to do what we need to do or we need not to be here anymore?
It's always somebody else's problem, right? You're in the middle of this bureaucracy that's been moving this way for years. Even if you see the problems, that's not my problem in operations. It's those staff guys whose overhead's gone through the roof. So you need a leader to give that sense of urgency and drive the change.
I think you're both talking about aspects of accountability. Is that an okay word to put down?
Sure. But I think but even as an executive team member, even if it's something, I have a fiduciary responsibility to the organization, and to mindfully sit by and say, manager X is not doing their job, and that's not my problem. Yeah.
Well, no, it is, and that's right, it is your problem because they work for you and you are responsible for the company.
Well, even if it's my,
But,
there's some,
correct.
you have the ability, it goes back to the influence conversation that we were having earlier, and I don't have to report, you don't have to report to me for me to influence your behavior.
How do you think middle management felt? Do you think they were going to resist change?
Everybody resists change.
Yeah, exactly, right, so, because middle management referred to senior management at that time, and the change is painful. And what they did not know, where do they stand now?
I think middle management they were probably relieved, because now they can speak up and share the challenges they were facing, because before, when they were bringing up problems, they were basically asked to basically shut up and just do your job. So probably middle management was really relieved probably that they could.
Well, it gave them a voice.
Well, but they're also worried about their jobs, right? I mean, it's clear if there's a change agent coming in and the overhead's high, that people are leaving. And so you got to strike that balance between, we have to improve this to save the company, right? So I can see them being afraid too.
Well, they're probably also going to
Well,
have to
it's a
deal with
company.
the layoff situation on a bigger scale. They're going to have to face their employees and have probably more of those conversations, and that's the unfun part about your job sometimes. So they're going to have to do a lot of the dirty work themselves probably, which that's not a fun thing to look forward to. But at the same time, it's giving them an opportunity to have their voice heard.
What did you experience with the middle management?
Well, it's interesting. The dialogue is spot on, what I could pick up from the dialogue, but middle management was mixed. You had some folks who welcomed the change, and you had others who resisted it. And it depends on whether they were in I call it the good old boys network, and, were taken care of by the existing management team, or whether they, as someone mentioned, were people who, had good ideas, would surface them, or managers who, would report things in a direct way or surface problems and were frustrated by it. So the middle management layer was mixed. It's not ironic, but because I found this to be true in other businesses that I've run, the average employee who's, making something, working in a factory or in a function, many of our professionals, they welcome the change. So it was very high resistance at top level, mixed resistance at the middle level, probably 60-40 against in the middle level, and welcoming change at the lower levels in the organization. That's kind of what I found and experienced.
Did you find anybody in the middle management in that 60-40 ratio that was, so enthusiastic and so transforming that you either elevated them or made them a part of your change team?
You bet I did. I wherever I could find middle management that I felt were capable, that understood, we called it, those who get it, I found opportunities, looked for opportunities to move them to higher levels, different levels where they could influence. What else? And again, think transformation, think global, think, well, how do you, it's definitely MTI still is in many ways a U.S.-centric company, but it's with, 45% of the revenue outside of North America. There's a rest of the world, from the standpoint of company culture and what it was like in other parts of the world. So it's a transformation that has to really cut across country boundaries. So think in terms of levers that you can use, that if you're trying to transform an organization, things you can put in place that, and think of yourself as a CEO, and what kinds of things do you do to actually affect an employee, working in a Shanghai plant as an operator versus one who's working in a U.S. factory, or a U.S. manager in Thailand versus one in North America.
Giving them a voice to be heard throughout the organization. Giving them a voice.
Giving them a voice to be heard?
A voice?
Improving some of their benefits, their working conditions, their, in our case, employee cafeteria food.
But even just like basic rewards and recognition, because I think a lot of times in global markets, what employees value is different. And in some cases it's time, in some cases it's just acknowledgement, in some cases it's platform to be heard, in some cases it's monetary compensation. So it's really understanding what's going to drive their behavior and what they value, and then being able to put some type of program in place that's really going to drive that, that change and that change in thinking and behavior.
Mm-hmm. So, reward and recognition was clearly an area that falls into the how-to.
Since you were looking to lower overhead, did you shift any production out of the U.S. into lower cost areas?
Yeah, actually we did. Not a lot, but we did. But it was through what I call a shared service function. The company had a small shared service function, and we expanded that, and actually set up some outside U.S. Service centers with one case in India, another case in Romania. Not huge, but it was small, but it was an aspect of that.
Did you look at, you were in existing foreign countries already, did you look at the countries you needed to go into versus the ones you were already in?
Yes, just as an aside, India has a paper industry. It's growing very rapidly. We had no presence there in this time period. Actually, within the last 3 years, we've gone from 0 market share for PCC to about 65%. We have 5 satellites in India today where we didn't have them 3 years ago. So going into other countries, new countries, was something that we did. Also expanded our base in Thailand.
Just going back to the cultural global transformation, I'd say moving key leaders from one geography to another to kind of share the change process and assimilate leadership team members across continents, regions.
But just the basic global expansion, where are the growth markets? Where are the opportunities? Like we were talking about, are you in the right markets? Where do you need to be for short-term and long-term, and doing a reassessment of where you're at today and where you need to be to get where you need to go.
So it's sort of baseline, define a current condition, then define a target condition,
Yeah.
and a time frame to get to the target.
Right.
That's what we did.
Did you put a scorecard in place to measure that?
We did. So scorecard was something falls in the how category.
You didn't really say whether you took your core products and tried to expand those into new markets, or whether you tried to increase the number of products and types of products. It sounds like you tried to expand your core products, but you hadn't said.
That's primarily true. It was core products to new markets and new geographies. And the reason, at least in the paper side of the business, that's very doable because the paper making technology and the machines that make paper are global and they go around the world, and so there are a lot of similarities. A paper maker in China making printing and writing paper of a certain brightness, the equipment they use for that is going to be, if it's current equipment, is going to be very similar to what you find in the U.S. So the product works on that grade of paper on a type of machine in North America or Europe, it'll work in China. Now, you bring up a very interesting point. What we have been doing in our development work is, in the last 3 years, is working at tailoring our products more to the differences in markets and the nuances that you find in the Thai market or the China market, as opposed to the traditional North American and European markets. But that's something that came later. At this point in time, 2007, we're focused on this, this array of issues and problems, and a company listing, sort of as a ship would list, really not moving in any direction, and it hadn't moved for a while. So, and back to the question of what kinds of levers, I think you've touched on some. A number of them. Actually, as I step back from this list, I was going to ask Marlene, is this a class to develop CEOs? Because I think you've got a fairly encompassing list. Many of the things. It might be a good time. Let me start you through, and I think as you see some of the things we did, it'll spur more questions. But you might want to. You can keep track if you like, Marlene, on checking off items that we hit, and it's a little unfair to try to do this in 2 hours or an hour and a half, because there's a lot more information that you need to actually do it effectively, but I think you've done an outstanding job of identifying, the core things we looked at, how, the what did we actually do. I think you'll find you hit many of them, and it's the how, the transformational part, that is a little harder to assess because of understanding the key things and people in a company that you use to actually change culture, and structures that you put in place that are going to be different for any company, that you need to better understand how things actually work in the company. But let me start through, and we'll start with the where did we focus. And okay, so we focused on 4 areas, and I think you've touched on them directly or indirectly. And the first was direction and strategy. Very clearly, and I found this throughout my career in running businesses, unless you have a target condition for where you want to be with a company in a given period of time, unless you have a clear vision of where you want to take a company, and it has to be very clear, it is very difficult for a company to achieve what may be unspoken targets or ambiguous goals. And if you don't have clear direction, clear targets, then you also find the strategy will be faulty. So developing sound strategies requires strong vision, good direction, and it requires knowing how fast you need to go. In other words, how fast do you have to get to a target? And in our case, I came in and said, after talking to the investor base and talking to employees, I concluded I had to move very, very fast. That the further deterioration in the capital of the company, employee morale, was headed further south. And so obviously I focused on culture as part of that, and we touched on that, and I'll show you more of what kinds of things I looked at. We did things like employee surveys, a lot of talking to people, trying to connect dots. Execution as a point of focus. The company was clearly poor at executing most of the things it set out to do. One of the reasons for the high capital expenditures, not one of them, when we looked at it, was a lack of clarity on, what it is that you're targeting and how you execute to that target. But basic things like a budget around capital, not executing to the budget, not executing to a sales plan that's going to bring in the additional revenue that justified the capital to begin with. Another key aspect was leadership, right? Because leadership is about defining vision, strategy, direction, shaping culture, and executing. Those are some of the primary requisites for leadership in a company in terms of what employees look to their leaders for. They look to leaders in the companies to help, to set the strategy, the direction, and make those hard decisions around getting there. So these were the 4 primary areas of focus. That was what I call a longer-term focus that came out of within setting direction strategy that said, look, we need to focus on growth. In spite of that growth curve that you saw around revenue, when I came in and looked at what was happening in the PCC business, which had been the growth engine of the company, I did something as simple as I did a product life cycle curve for PCC, and the curve was built on the number of satellites cumulatively that had been going in since 1989, actually. And it was very interesting. The company had always looked at sales, and so sales had been going up. But when you look at the number of satellite plants that were going in, they peaked in the year 2000. And by the time I got there, it was following the classic S-curve. I assume some of you have studied the S-curve. Well, the company was on its way down. So the growth product of the company was in decline, right? And it turns out one of the reasons it was in decline is that new products in the PCC business were not being developed. The pipeline became dry, and the company should have been introducing new products around 2000 and 2001 to keep the real growth curve going up. So technology and innovation was the area that I felt we needed to focus on for the longer term. And we began to set a strategy of structural changes, which I'll talk about in a minute. Operations excellence is an area that I have managed early on most of my businesses around, and it used to be known as TQM in the 1980s, evolved to Six Sigma, Lean is commonly used, and I put it on the umbrella of operational excellence in the company. So that became a point of focus, and that also I viewed that as longer term, and I'll explain why in a minute. Expense reduction. With that growth in expenses, we clearly had a focus on getting expenses down and actually developing a culture that was going to be more attuned to better expense control. Safe work environment, you hit that one. Clearly, coming in from a company, I felt unsafe in the company when I came here. I told employees that, told managers that, so focusing on safety. And this culture change transformation was a whole area of focus for me and some of the people who worked with me. And there was another one called business portfolio that somebody touched on very early. So do we have the right businesses? Do we have the right sub-businesses? Are we in the right segments? Do we have the right products? Okay, and I think we hit some of those, right, Marlene?
We hit all of those pretty much.
Good. I told you we had a class of budding CEOs here. Now, I'm going to give you a little timeline on the next one, and let's focus just on the top part. But what did I do early? The first two things I did, actually, there were a number of first things, but we implemented immediate expense and capital allocation control. So we put every business unit on a you earn the right to capital. So every business was not just put on a budget, they had to justify very clearly what that capital was going to do and make a commitment to it. And if they were not achieving cost, remember I said the whole company was below cost of capital? I put a constraint on that said they wouldn't get any additional capital until they achieved cost of capital level. So they had to figure out how to get the cost of capital without putting any more capital in. And the expense control area was, and this was a very tough one, because what I was trying to do, I did not want to impede growth on sales, yet I needed to get an inflection. I needed to get that growth curve on expenses to flatten. So my immediate challenge was we're going to hold expenses even for the balance of 2007. Someone also mentioned earlier getting a handle on where you're spending money or understanding all the pieces. Believe it or not, the company did not know all the areas that it was spending money in. It did not have a holistic view of its expenses. It had them in pockets, in regions. There was not a holistic view. We did a very deep diagnosis of the company, where I went in with a few people and examined every nook and cranny, examined history, did a deep analysis of the history of each of the businesses and their subsegments. As part of strategic analysis, one of the approaches I use that I found to be effective is it's always very important to know where you've been as a business. And there really are, some basic questions that revolve around, if you're doing strategic analysis, that revolve around where have you been, where are you today, what is your de facto strategy, where do you want to go, and what's your strategy to get there? Because most of the time, companies have strategies in place, but the direction may not be clear, and it may not be the right strategy for the direction that you need to go in. So that was part of what I call a basic strategic review, and it was looking at every corner of a company and putting that in context of your classic ways of looking at performance for a business. We did enough, and I'm going to go into more of these with you, but I'm just trying to give you the basic headlines. In this time period, I also went out and as soon as I had a sense of where we're going to, began to talk to investors individually, let them vent, get their thoughts on the business, let them know what I was beginning to do. So there was an outreach to the investor base as well as customers, because I needed that customer input early on. So the first 3 months were highly intense and centered around strategy, deeper understanding of the culture, deeper understanding of customers, deeper understanding of employees, and part of that understanding then also allowed me to talk employees. So I began to engage in broader communications around the world with all employees. I'm gonna move ahead, but these are the cycles the company has gone through, and I'm going to show you the pieces. We were able to after this restructuring that we did in the third quarter. So I came in March. By the time we got to the third quarter of the year, we announced the restructuring of the company, and I'll share with you some of the things we did around it. But out of that strategic analysis, we came up with businesses we wanted to get out of, plants we needed to close, consolidations that needed to take place. And a little hard to read, but talked about instituting strict capital allocation rules, this expense reduction process. I instituted early on a suggestion system. This was to begin to start to get the company used to the idea that employees have good ideas and have ideas, and we used the expense reduction team or the expense reduction process. I also set up a team, which I'll show you in a minute too, to help us, and it was a way to begin to get broader employee involvement. I should tell you, down here on the list, you'll see somewhere that I basically replaced 5 of the 7 top managers, the 7 top executives of the company, 5 of the 7 in that time frame. When I came into the company, I should have mentioned this earlier, that within the first 2 weeks, I sat each executive down individually and just had a heart-to-heart conversation with them. And keep in mind, I had known them somewhat from being on the board, and basically had a discussion that I said, look, I'm going to ask you to do 3 things, and if you can do these 3 things, you're going to make it with me. If you can't do any one of the 3, then it's going to probably be best to part company. And the 3 things I asked them to do, I said, I need you to be willing to learn, I need you to be willing to change, and the 3rd thing, I need you to leave your baggage at the door. So it was like, wipe your slate clean, and all of the hidden agendas that you're dealing with, the politics in the company, I don't want to see any part of that. And what had formed in the company, there's no way for you to know this, but cliques, management cliques had formed, and power cliques, and so there was a lot of baggage there. And I had a sense of that, and what I wanted was, I wanted to let the team know, the managers or executives, they weren't really a team, that they could make it, but they really had to be willing to do these 3 things. And in a very short period of time, first my HR manager came to me and said, I can't take it, I've got to leave because I can't make this change. I'm not willing, and I can't. Others I had to ask to leave. So having a team in place at the top with me, or having a critical mass for the change, which somebody touched on when we were going through the list of things, was very important, because having the top leadership in sync and alignment is critical to then bringing the change about at the next level.
Joe, can you give us a sense for the timeline between, you said 2 weeks in, you had that conversation, but then you eventually had to ask some of them to leave. So was that over a period of a couple of months or a half year?
Yeah, the first one out went after, I'm going to say, 4 to 5 months. And then there were 2 more within the next 5 to 6 months. Something to keep in mind, the other thing to keep in mind, that with companies and businesses, you can't change everyone out at the same time. So it's just reality. And some I decided that I had a feeling they're going to have trouble making it. I tried to work with them longer. And to be honest with you, I probably stayed with some folks longer than I should have, in the best interest of the company, right? And that's not an uncommon mistake of CEOs. I participate early on, and I've been participating in a CEO workshop at Harvard that brings together a small group of CEOs from all size companies around the world, actually. And a common failure of CEOs is to stay with executives longer than they should, from a performance standpoint. And that happened to me on 1 or 2 of these. But anyway, it's something that is important. It's very critical. And I knew from past experience that to change a culture and to bring about this kind of a change, I needed to have, of that top team, I needed to have most of them with me. I didn't need them all, but I needed a critical mass. I put safety as the first major thing, the primary driver of my agenda. And I installed that very, very quickly. I established an environment, health, and safety lead team. Now, you're going to see me talk about lead teams in the company. Someone talked about reaching out or how do you reach out and connect employees around the globe. Well, I set this up as a global EHS lead team, and I brought in representatives from each region. So every part of the world was represented on this lead team, right? And this lead team for environment, health, and safety was the team, and I chaired it as the chairman of the lead team, and I chaired it, and it was from here that we developed the safety vision, the safety practices, the policies that we then drove into the company. I did the same thing for operational excellence. I set up an operational excellence lead team, and here again, I brought in with me on the team, brought in some business unit heads, manufacturing managers, and again, the representatives were cross-business and global. And we began what I call the journey of bringing in a culture of lean to the company. And I could probably spend at least 2 hours on this subject with you, but my objective here was to build a foundation for lean and not get any results out of lean for at least 2 years, because I knew that if you try to focus on outcomes from a lean standpoint, the culture change will not be effective. It just doesn't, and it takes at least 2 years to get foundations and platforms established. And that's one of the things I communicated with the street, with investors, and they were constantly asking me, when are they going to see savings from this initiative? And I told them, you won't. So I said, you don't expect to see any savings, anything, for at least 2 years. It's going to come later, because it's designed and it's built as a way to operate as a company. And it's a belief I have, as a philosophy of how to operate. Not only did we put it in all manufacturing, after 2.5 years, we began to then move operational excellence into all resource unit functions. So if you come into the company today, you go into our legal department, finance department, HR department, they are employing the principles of lean. So that's what I mean by an operating philosophy for a company. So I chaired that team. I also set up an expense reduction team that I mentioned to you earlier. As part of expense reduction, I instituted something called the New York apartment living approach to spending. Anybody want to guess at what that is? Anybody live in New York or live in a small apartment for an extended period of time?
Spend only what you can fit in your apartment.
Exactly. Well, it actually, what it ends up being after a period of time, the rule is you can't bring something in unless you take something out. So if I buy a new shirt, I throw an old shirt out or give it away. So it was introducing this concept of, well, you're constrained, all right? We're not going to simply add anymore, that we're spending enough, we have to trade off, right? We have to trade things off. So that was the initial concept and approach that I used, and I forced a flat budget year on year to every business unit and every region. They simply could not spend more. One of the things that drove out is they needed to then understand where they were spending very clearly. That led to developing some processes where we could develop a holistic global view of what we were spending around the world. I then established a technology lead team, and I also chaired that. And what I did here is I brought in senior managers from across the businesses and from our research organization. And I also was interesting, the R&D group had been reporting to the CEO, and remember, given that we have 3 different business units, we had 3, people were doing R&D in 3 different areas. More importantly, there were dedicated people to those areas, but I moved R&D accountability under each business unit. So now I gave the business unit heads who had P&L accountability the accountability for R&D. That was a structural change. So you're going to be seeing structural changes, people changes, putting mechanisms in place that are all designed to change culture. Because here I was trying to change the R&D culture to one of alignment, accountability, and speed. We needed new products. We needed them fast. We had to get our pipeline filled up because we were driving ourselves to change the shape of that product life cycle, which was heading down. The idea was to get that, get a double S, get it to move up again. So this was another lever that I used to bring the R&D organization, but also to put best practices in place, such as stage gate processes and idea generation processes that would feed the front end of the technology processes. The transparency and openness, communications, as I mentioned, was a clear, non-norm. The company was relatively closed. People kept information to themselves. The top management didn't want to hear bad news, so I established something called a Friday report. And what this was, I asked every senior manager, the executives, to every Friday write a 1 or 2 page simple single bullets and put in there what happened that was of significance that week, the good and the bad, customer issues, quality issues, manufacturing issues. And enormous resistance to this, enormous resistance. And the resistance was that, well, that secrets of the company were going to get out, that, that they didn't want to put it in, it wasn't going to work. Now, remember, this is an executive team of a public company worried about another executive, right, fellow team member, hearing what they were doing in their business. And also resistance to saying things that were not, that were mistakes. I wanted to see. So I was able to do this for, I got it going for about 3 months. And then I said, what we're going to do now is every 2 weeks, we're going to put all of these together. We're going to send them to all employees. All employees. Well, you would think I was proposing something that that was from Mars. Enormous. What are you kidding? We can't do this. There's no way we can share this with employees. And I basically said, well, look, this is what we're going to do. We have to do this. We have to bring and let our employees, as part of transparency and openness, this isn't just for top management and your direct reports. This is for all employees. If we're going to create an open culture, and if we want our employees engaged, it's a starting point for engagement, to at least bring that information out. So, and this was done across the globe. So another major leverage point, another major lever to changing the culture. And again, the culture doesn't change, a month or two afterwards. It's the cumulative effect of this change plus some of the others that I'm going to talk to you about. The notion that you could be at zero injuries was something new, and using metrics effectively around safety was a major change. We started doing something else with Wall Street, with analysts. We started I introduced the idea that we're going to be more open and transparent. The company had been relatively closed, so we started to share more information with the analysts that covered us, as well as our major shareholders. So we would tell them what we were doing, why we were doing it, what was going well, and what wasn't going so well, okay? Which I felt was critical to reestablish the credibility of the company with the investor base. We also instituted communication of the top 80 to 100 employees, primarily managers, but had some in that group of 80 to 100 were people who had strong influence or played a strong role in different parts of the company. And so we have what we call our top 80 to 100, and I instituted a call with them after each analyst call to keep them abreast of what's happening in the company. And then I also instituted a global town hall across the globe, and I introduced the concept of moose questions. Most of you know what a moose question is, or an elephant. Is there an elephant in a room? An elephant question. But getting employees comfortable. First, I had to get managers more comfortable with it, to ask hard questions. And so that I introduced, again, as a mechanism to, start to develop this culture of it's really an aspect of high performance, as you probably know, that you have to have. People have to be willing to talk about mistakes. You share good things and you share the things that don't go well, so you can share those across boundaries. And then required every senior manager to communicate with their employees monthly through dashboards and verbal communications, where they had to have their own town hall meetings. So you're seeing a common thread: communications and mechanisms, right? So the openness, transparency, involvement needs to be fostered in a way. If you don't have structures in a company to do it, you have to put them in place. Talked about a little bit we restructured. We came out of the restructuring with record earnings, and then we were hit with a second recession, and we had to actually start to restructure again. These are just the operational excellence initiatives began to actually take hold. I'm going to say around 2009. Mid-2009, so it took about 2.5 years to where we're actually beginning to see some results from it. And we started with, in a very traditional way, with 5S, those of you familiar with the processes and tools of Lean, and then moved to standard work. We were able to revitalize by 2010. We had moved we had introduced into the pipeline 25 new product ideas. Today we have more than 60. And by 2010, I'd say we had begun to reestablish credibility with the street. Let's flip to here.
Hey, Joe, you didn't really talk about how you jump-started the focused innovation again to get those 25 products in.
Can you elaborate a little bit there?
Yeah, one of the things that we did was in the lead team is first of all get the R&D leaders to understand that the company was in part failing because development was not delivering, and understand why the development function was not delivering, and move them out of being defensive. And they didn't like, having to move under business units. They resented it. So the early part of that was helping them understand that the alignment with business units and customers of those business units was a key to being successful in the business. And through the technology lead team, we established the idea generation mechanism, where we were looking for ideas and came up with processes to better engage customers and employees for development ideas for the company. So new product ideas, process improvement ideas. So the front end of this was ideas. To have products to develop, you need ideas. Without ideas, you can't have a pipeline. So we, as a team, we focused on idea generation and how to tap, people around the world for their ideas. The second part was being able to efficiently and effectively move those ideas from concept to stages of development, where you go from concept to testing is it economical? Will it work? How much money do you have to spend? And from a commercial standpoint, if you're successful, what does it mean in terms of revenue and profitability? So we introduced a stage gate process that we then standardized around the company. So each of the businesses used the stage gate process and the idea generation process that came out of the technology lead team. Did that help answer your question? I'd say those are the first major things that we did, in addition to helping the technology leaders really get in sync. And they were in a funk. They were in a real funk. They were demotivated, and but part of their lack of motivation came from also lack of direction. But they had liked the prestige of reporting to the CEO, and they thought, well, now they're not reporting to the CEO anymore, so that diminished them, when in fact it didn't. And so the technology lead team, which I chaired, served to provide an alternative forum for them. I want to just stop at this point to see if there are any other questions, because let me hit this first. This was touched on before in terms of performance and incentives and compensation and reward and recognition, but we established during that time period, I call them transformation rules for leaders. And what these represented were, if you think about the cultural norms that I showed you before, that these are sort of the antithesis of those. And so we set out and said, every leader in the company, we want them to be fast, focused, and fundamental. We want them really to be binary, that the company operated in maybe land. Well, maybe we can do this, and maybe we can do that. Decisions were slow. Trying to move decisions to yes or no. We were looking for leaders who were going to be positive, that the world and businesses face enormous obstacles every day, but the attitude and how you approach those, and when you face an obstacle, you expect folks to come up with solutions to overcome them or bypass them, go around the obstacle and still get it done. Communications, obviously you can see our expectation was that every leader in the company needed to be a communicator at all levels. It needed to communicate sideways, up, down. Transparency needed to become a norm, and we needed leaders in the company to be informed, and not just about the company or about their business. They needed to be informed about what's going on in the world and in the countries we operated in, And I mentioned earlier that execution was a major cultural deficiency, so delivering targeted results was a key transformation rule that we put in place, and they were built on living the values. So living values, the values of the company that revolve around respect for each other, respect for employees, integrity of relationships, integrity of how we work together, integrity with suppliers, customers, those are givens. And today, and what we've been doing for a number of years, we measure people on how well they're doing these things, and we give them feedback in addition to how well they're delivering their specific objectives and whatever they're doing. This became, given that we're doing it across basically all employees in the company, and it became another lever inside the transformation of the company. It also is a screen for what we look for when we bring people, when we hire people inside the company. We look primarily at values, and we look for people who either will bring these things in or we can help them develop these. The other thing we did around people, starting with the top management, you noticed early on I showed you an ROC curve. ROC went from 11 to 5, 9, or 6%. The company, up until I came in, only measured operating income for incentive compensation through, let's say, the top 100, 150 people in the company. I could not find one report that measured return on capital. So in the first year, I put in place an incentive compensation that had actually 3 components, but one component we kept. Some part was operating income, earnings. Second part was return on capital, and then the third part, I had a personal part that focused on working capital, expense reduction, and operations leadership. And so that also, from the top level, was a major change and a major, way to help get the right focus and a right accountability from both an alignment standpoint, so that the compensation systems were rewarding the right things, rewarding the things that were going to make a difference, and also were going to change the culture. We expanded the idea generation process that we introduced in the expense control and in R&D, and I mentioned expense control. We did that just to begin to start to, I called it piloting, idea generation. We instituted a company-wide suggestion system, and I think I have a chart. I'll show you how many, but today we're generating about 10,000, I think last year was around 10,000 ideas across 2,000 employees in a year. And that's significant from the standpoint that we're converting about 60% of those into things we actually do. So we're implementing about 6,000 ideas a year. Think about the company in 2006 relative to, if an employee had an idea, did he, rarely would surface it, and if he did surface it, probably either got ignored or didn't get feedback on it. And so that's an indicator of culture change, but it's also was a major mechanism for us to begin as a way to get involvement. The other thing we did, someone mentioned recognition and other types of reward. We introduced the concept of Bravo chips. And what a Bravo chip is that any executive or direct report of an executive can give an employee for when they observe something that they're doing that is exemplary, goes above and beyond, is significant. They can give them, let's say, 5 chips. Each chip is worth 5 shares of stock, converted to cash a year from the time that they give them those chips. recognition was very, very low in the company in terms of recognizing employees, and this now became a way to offer all employees around the world a way to be recognized for sometimes the little things they do that are very important, can have a big impact on a customer, and actually provide something to them that they feel good about, but they also provides a linkage to the company and the success of the company. So I'm going to walk you through some of these others real fast, but I'm going to show you where we were in safety and where we are today. Last year we went from 2.5, and we're now approaching world class at 0.4, and we're on our way to world class, which is 0.1. Productivity in the company, which wasn't even being measured, has gone up from, in terms of sales per employee, from about 390 up to 494. That's about a 25% increase. Tons per hour has had a commensurate change. Our SG&A, at the time I came in, we were spending $190 million on all fixed expenses, PA, plant administrative expense, and SG&A. Today, we took out about $45 million, so that's about 4.5 points of revenue that came out. Our current cash position, we had $76 million in cash then, we have $468 now. Our debt then was $200 million, we have $100 million, well, you can see it here, we're sitting at so we reduced debt, increased cash by a lot, which is another challenge for us. These are the idea generation. In 2011, we were up to 6,000. We increased that by 50%. This year, we're running at about a 12 to 13,000 idea rate level. Kaizens, for those of you unfamiliar with Kaizens, they're events. We bring employees together to focus on a process, a problem, and it can be a half day to 3 days. It's typically cross-functional. Today we hold about, last year we held almost 1,200 events. These are have become a way of life in the company, so it is a little more formalized way for all employees to get involved in making the company better. Very powerful, and it is what is the engine to what I call continuous improvement. So between the ideas that come from Kaizen events and the ideas that come from employees, those are the things that provide the real sustainability around continuous improvement. This is where our earnings move to from levels in here. If you can see this okay, in the $1.27, we're now pushing over $2 a share. So earnings have, over this time period, have gone up about 70%, and that is with the recession that we had in here. The during the financial crisis in 2008 and 9, our return on capital went from the first year after restructuring, we went to 8, recession hit, dropped, and now we're actually pushing, first quarter at 12, we're pushing at over 9%. Financial trends, working capital, heavy focus have gone from the 80-day, 70, 80-day range down to 50. 55 range. Strong cash flow. New product, this is what our product development looks like, how it's evolved. You can see that between what we've launched and what we have in our various stages, we've got over, in total over 90 have been developed over this period of time. So to me, this is one of the strongest indicators of health inside the company, so it's a very important metric for us. TSR, you can see when you look at a 3-year, we're beating our peers. We have a peer index that we measure, and we're beating the S&P 400, and here it's a measurement against the more conventional S&P 500 Dow over the last year. We're considered by the investor base as two things today, a restructuring story, yes, but we're also now considered as a strong operating company. Back then, that was furthest from anybody's mind. I'm going to maybe stop at this point in time, but These just might be helpful. I know we're running out of time, Marlene, but it helps to sort of synthesize and bring together the concepts of transformation into what it is, and we're still building. So this notion of there's a beginning and an end, those are programs. We have a process of continuous transformation of the company, and what we keep working at building is a customer-focused, fact-based, high-achieving, disciplined, open, learning, measuring, people-centered organization. So all those things, and a lot more that I didn't have time to show you, that went into doing these things to become these things. So this is the vision for the company that goes beyond financial metrics and financial targets and size of the company, but it's the how we operate. It's the what I call it's the visceral aspect of a company. When you walk in and you spend a little time, this is what you're able to take away from it. And I talked about the foundation pieces to get here, to evolve, to further develop our operational excellence, continuous improvement principles and processes. Hoshin Conry, if you know you're familiar with that is an execution approach to achieving strategy and objective deployment. It's also a major mechanism that we put in place that I didn't mention. If you look at Emerson uses the same process, and they never call it this. Other companies do, but it provides that tight linkage between vision, direction, strategy, and the day-to-day things that you're doing and the KPIs, the improvement things that you're going after. The notion of teaming, we didn't spend much time on it. Major lever of what changed in the company. The company rarely used teams. We use teams to drive the culture changes cross-border, cross-businesses. So today there aren't silos anymore. We share people across businesses. We have a very strong shared service function. And the notion of how to better utilize teams to run a company and virtual. These are virtual teams around the world. And we're further evolving into low overhead consciousness, low overhead company with a very high process orientation. So process thinking is embedded. I'm going to stop here. I was going to do some more stuff with you around what leadership is all about, but let me stop and just throw it open for more questions, or if you want to stop at this point in time, Marlene, I know I'm running over, so but let me pause.
I know it's 5 p.m. your time. However,
I'm fine. I'm happy to spend a little more time with you, whatever you need.
you have a little more time if you can spend it.
Sure.
So, let's have some questions, and then we'll see we won't go for another hour, but let's see what happens in the next 15, 20 minutes. How's that?
Sounds good to me.
I have a question. Now, as you're growing the company and with the operational excellence and pretty good cash flow, are you considering any acquisition as a strategy for growth at this time?
Yes, for the last 3 years, for the first 3 years, I didn't think the company was ready to assimilate an acquisition. It didn't have the base systems, the culture, the discipline, and acquisitions are hard to do depending on their size and what you're trying to do with them. And for the last 3 years, M&A has been a key part of the strategy. We just haven't been able to pull any off yet, but we've been engaged in some fairly significant discussions with companies. We bid on some things. So in the coming years, you're going to see MTI buying more companies, or buying companies. So yes, it is a key part of the strategy.
Thank you. Good. You came in March 2007. You started putting all these systems in place, and the economy went down. How did you manage the transition?
I'm sorry, I couldn't hear the question. You want to repeat it, or somebody repeat it?
That you came in 2007 and put all these systems and structures and changes in place, but then the economy really dived, and how did you make it through that financial crisis?
And
In other words, you put these systems and these changes in place.
Right.
The economy crashed again.
Right.
How did you get through the change?
Yeah, what you see was interesting. What everybody expected us to do in the company, right, and even outside the company, is stop doing all the things we were doing around operational excellence. Remember I described we're putting these things in and not getting any tangible results because I wasn't trying to, because I knew you need a foundation to actually drive results over time, and because they're coming from culture change. And we stayed the course. We maintained the spending levels in R&D. We maintained the resourcing to drive the operational excellence. I should mention that the operational excellence has succeeded because we did it through the top leadership of the company learning how to lead it. And we used very few consultants. We used them in specialized ways to come in and teach us or teach the people in the organization, the leaders. We facilitated ourselves. And so we kept all of those things going. And that was pretty powerful because it sent a very, very strong message to all employees that these are not programs. These are about developing a new way to operate the company. So it actually helped us in a sense that it really stuck. I mean, we didn't anything was safety related, anything that was related to OE. We even sent people to conferences during the depths of the recession that helped them do more around OE. And the expense side we were able to use that to our advantage as well because we then accelerated the expense reduction. When we started, I should have mentioned, we had 3,100 employees. Today we have 2,100. And that came out of the two restructurings, that we had to make in those two different time periods. And it was the second period was a very difficult period because we had, particularly for the team that had led it, and I think in many employees, because we really were on a great track coming out of that first restructuring, getting traction, and the culture changes beginning to happen, and then it was like letting the air out because we lost, particularly in our refractories business, which serves the steel industry, we lost 50% of our revenue in 4 months. I hope that answered the question.
Thank you.
So I just had a question. You had mentioned the use of consultants, but I'm curious, when you're coming in to issues this deep and this wide, and you ultimately let 5 of your senior folks go over whatever, a 3 or 4 month period, I guess what resources, obviously you are a big part of it, but what other people or consulting companies did you partner with to get all of these things going at the same time?
Well, I actually didn't use any for these things. These all came from things I learned over my years at Alcoa, or running businesses. So I didn't learn these things, and I didn't know many of these things in 1975, but through experience, through formal training, through Alcoa was always very good of exposing its leaders, its managers, its executives to different things, organizational development concepts, transformation concepts, and strategy is something that I've always enjoyed doing. Not just enjoyed it, but strategy is one of the most critical things for a business. You have to have clarity of where you're going, and it's something. So I led the strategy development. The culture change things were just something that, and again, I happen to think a CEO has got to take this stuff in his or her hands and lead it. Now, you may not, if there are areas that you don't understand as well, then you get help. I'm not suggesting you don't get help. In my case, and remember, when I came into this job, I was 60 years old. So I already had 37 years of experience, and I just brought all the experience I had. And Marlene touched on this. In my career, I worked in just about every part of a business that you can imagine. The only thing I didn't do was the only function I didn't work in was legal, and I was sometimes accused of practicing law, trying to practice law from a legal standpoint. But it was just being able to take, and many of these things, see, if you approach a company like this, and you approach a subject like how do you transform a company strategically, it can lead you to doing the right things in place over time. Now, the thing that is difficult to gauge, and where experience does come in, is how fast and how hard do you push, and when do you let up? Because clearly I was providing a lot of the energy for this, and then I needed some leaders who were going to help me. So I needed that critical mass I mentioned earlier. So I did brought some people in from the outside. One I had known at Alcoa, and a second one I had known from Alcoa came in to help me, and we basically did it ourselves. But I happen to be from one of the things I've learned over the years, when you're leading a company or a business unit, you want to bring your team along with you as you're diagnosing, as you're reshaping your culture, you're reshaping your change. That helps them understand, develop learning, and then lead, because they also have ownership. So every step of the way, I was bringing that leadership team with me, and then asking them, and I helped them with it, take their leadership team to look at the company's history, look at the competitive sets, look at the benchmarking, and shape the strategy. So there's a twofold aspect to it. One, it's not just because I know a lot, but I also know that to get lasting change that you can't directly control, you're doing all of this through other people, they have to be a very significant part of the change process. So we did that throughout. It just takes a lot of energy and time, as my wife Donna and Marlene's friend can attest to, more time than she had bargained for at the time. I thought this was going to be about a 6-month thing where I was going to be able to get it straightened out. It turned out to take a little bit longer.
2 more questions?
I have one. Now that you look back on it, is there anything that you would have done different?
I touched on it. There are 2 people I would have asked to leave sooner. I waited too long. I tried to go too long with them, and that is one thing I would have done differently. There's nothing else major. That's probably the major thing. And you do make mistakes, and I think that's one of the things that I've learned when you're leading a business, a function. It's you move into unknown territory on a lot of these things. You don't know what the effect is necessarily. You don't know that it's going to come out the way you're intending it, but you try it, and you try certain things, and if they don't work, then you move on. You try something else. So there was this idea of, let's try some stuff. Let's see how it works. And I try to bring that mentality to others in the organization who, would throw up barriers or would just be concerned and fearful of the effects it's going to have on, with a customer or the investors. Just sharing information with investors, just scared the heck out of my finance group and my head of investor relations. They, you can't do that, you can't say that. But yet I knew from my CFO experience at Alcoa that what investors are looking for companies that they can trust the leadership of. Investors today, unless they're hedge funds or index funds, they're investing, as much as they invest in space, where a company is and what they have, they're investing in the management of that company as well. So if they trust that management, they believe they're capable, they're honest, they have high integrity, it has an effect. And with employees, it's exactly the same way. So that's just a basic belief of mine, of being open and honest about the good and the bad that go on inside a company. And frankly, I don't think a company can perform at a high level for a sustainable period of time unless it has that kind of a culture.
Joe, what is the single most important lesson you've learned over your vast career that you would particularly want to share with us, with our soon-to-be MBAs?
I share this with my daughter and my sons. It's you know, when you have opportunities that are outside your domain, think hard about taking them before you say no. Personal development is about doing things you haven't done before. And they may be something that doesn't, you know, just sort of so different and I've always found, sure you have trepidations. You know, I had run a business group, went into a staff role, then went to Asia, had 5 years there, was running a business group, and Alcoa's CEO, you know, we agreed it was time to come back, and he said, well, I would like you to come and run our audit function. I'm giving you this as an example, all right? So I said, audit function? I said, I'm a businessman. I said, why do I want to, I don't want to go run the audit function. He said, yeah, but I have this idea. He said that, you know, something tells me that if we could put financial auditing together with environmental health and safety audits, with process audits, we could really, you know, having a big effect on the company. And I said, God, I really don't want to go into audit. So this was Paul O'Neill, the former Secretary of Treasury, and I had a lot of respect for him. I trusted him. The president of the company at the time, Alain Belda, also was encouraged. So I said, okay, I will try it. I will try it. And I did. And it turned out was another opportunity for culture change. And it was another opportunity to do something that that made a difference in the company. And so the corollary to trying, you know, going into areas that you may, you know, maybe sort of off where you are, the corollary to the learning aspect is bring that news it's new to you, so you're able to bring new ideas and you're able to achieve. And so bringing a sense of making something better than when you came in is an opportunity that you get when you go into an area that you don't know much about, because you can ask a lot of what I call dumb questions. And those dumb questions, it's like, you know, we want kids to ask these questions if you're a teacher in school. That's what you do. You go in and you ask a lot of questions, and all of a sudden you learn things that most are staring people in the face, and you say, well, let's go, and you can do things that others sometimes can't do. And I found that to be true of the audit experience. So I go into audit, all right, so I developed this integrated approach. Next thing you know, they asked me to take over environment, health, and safety, so I took that over and developed a 20-year sustainability program with the company's leaders. Great experience. Then they asked me to take over remediation of the company. Well, Alcoa had huge remediation responsibilities around the globe. Another area I'd never worked in, but they helped me see things that I hadn't seen before, and they became very valuable later as I then went on to run larger business groups for the company and develop better sustainability views of how to run a business. So I've been able to add something as well as take something out of most, if not all, of my experiences. So that would be the advice. If you have an opportunity to try something new and different, it isn't always on the path that you think you should be on, and stay open to it.
Thank you.
Joe, I cannot thank you enough for the time you spent with the class. You've covered so many concepts. We talked about it, of course, let alone this morning. And some of the articles we've read on leadership and corporate resilience, a lot of which I think what you've talked about with MPI. We do have something we would like to give to you virtually. Steve.
So Joe, as a fellow engineer, I know the engineers in the room and all the almost MBAers really appreciate you sharing your time with us. We know time is valuable in your business, especially as a CEO, and we appreciate you passing on all that knowledge to us, because especially on this last day of class, it helps culminate and bring together, you know, a lot of ideas that we've been studying. And but you know, as an almost MBAer, I am interested in your return on investment as the time that you gave us. And so I'm going to open this present for you to see what your return is. Part of your return is the appreciation of IMBA 93S. So again, we thank you, but also, since you shared so much of your time with us, we wanted to give some time back to you in the form of a little clock engraved with thanks from the executive programs at Pepperdine. So,
Oh, thank you. Thank you.
mail. But thank you very much. Appreciate it.
Thanks. Listen, I really appreciate it. I get my return, my reward is seeing your engagement. And as you can probably gather, I love what I do. And that is so important. If you like what you do, you know it's not work. And I have a sense that many of you, if not all of you, are engaged in what you do. You're engaged in your class. And for me, it's engagement with folks like yourself is what kind of gives me more energy, and I'm happy to do it. If I can ever be of help to any of you at any point in time, Marlene has my email address. Just let me know, and I'm happy to do that. Thanks, Marlene, for inviting me. I enjoyed doing it, and thanks also for closing at this time. I have a date tonight. I've been dating the same woman for how many years, Marlene? Going on 43. That's my wife Donna, who's a good friend of Marlene, and anyway, so that's where I'm headed now. So anyway, thank you all, and I wish you all the best of success.
Thank
See
you so much.
Take care. Bye bye.